I no longer believe that the state collapses or dissolves as I thought, after reading a few Bitcoin books and, the big debt cycle framework in 2020. But I do still believe deeply, looking out 20 years, Bitcoin at $100 trillion valuation means that governments can't endlessly spend deficits on foreign wars and wasteful welfare programs and funding whatever they want. Level one is just taking some cash and buying Bitcoin. Level two is looking at all of the things you have available to you as a public treasurer and saying, well, okay, the idea is Bitcoin per share. Let me do anything I can to get more Bitcoin. And then I think for someone like us, where, the Bitcoin pivot is like the business strategy at this point, what else can we do? Everybody that's tracking this or has a mental model that's implicitly or default in linear terms has the potential to get burned because when these things kind of reach some form of exit or escape velocity, like it's not linear, it's exponential.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey, everybody. Welcome back to the Bitcoin Frontier podcast. This week, I have on Dylan LeClair. Dylan, welcome.
Joe, I'm excited for this. I'm a fan of your work, and I tune into the X videos frequently, so happy to be here. Excited to chat.
Nice. Great to hear. And obviously, fan of what you've done with Bitcoin Magazine and Metaplanet too. So this will be a fun conversation. I want to start off with something that Vitalik said today. He basically on Twitter started questioning where the yield is coming from. Do you have any thoughts on that?
Yeah, it was a funny screenshot. I actually didn't read the conversation in full, but it's about kind of the intrinsic or inherent value of DeFi tokens and the endless sort of crypto protocols and tokens out there, and how many of these the thought around crypto investors is they try to pull from the legacy world and say, well, if this is the revenue or if this is the fee revenue, that's returned back to the token itself, then this should be the value, or if this justifies the value. And oftentimes the fees are really not oftentimes entirely. The fees are, driven by speculation and kind of, nihilistic, degenerate sort of speculation, which I think speculation in all assets is fine and useful. It's useful in financial markets for price discovery and something that's obviously not going away. But it was funny because, as someone pragmatically would look at that and say, oh, well, he almost just sort of invalidated the ETH thesis for a large swath of people. But I don't think that's what he meant with it. I don't think he was referring to ETH. It was a bit ironic. And many people were coming to question, well, wait, Vitalik said, does he actually believe this? Because, that's sort of the ETH 2.0, post proof of work, proof of stake ETH, with this kind of dynamic block space and, fees being returned in the form of, a burn or, deflationary supply is kind of the pitch, right? And that's, and this value accrual thesis for ETH is built on, its demand for its block space supposedly and the fees returned back to it. So it was funny to see it. I used to, admittedly, I spend less time than I used to privately and publicly thinking about and posting about altcoins. But nevertheless, it was a worthy thing to post today. I thought it was a bit funny.
Yeah, I thought it was pretty funny as well. I mean, I feel like the history of ETH has been always promising something bigger and better in the future, whether it was like, we're going to become ultrasound money or we're going to become, this proof of stake token. And the promises were kind of like what led to the price run-ups and the hype. And now that it's like, to me, from my perspective at this point, at least, there's nothing better to promise. And the market's kind of like, okay, well, what do we have to look forward to here? There's nothing. This is it. Well, this isn't that great.
Yeah. I mean, it really, it's with ETH, it tried to optimize, it's trying to optimize for all these different things. It's trying to be there's a spectrum of decentralization, right? It's not, many people refer to it as binary. Ultimately, decentralization is this kind of unquantifiable or imperfect spectrum. And, you see a lot of these ulterior crypto networks, tokens, whatnot, sacrifice on decentralization, protocol decentralization for optimization, whether that's throughput, or latency or whatever it may be. And so you have something like a Solana, right, which has captured the hive mind of speculation and token trading, token speculation, which ETH had basically a monopoly on for the first, I would say, half or 75% of its life. And so that is, brought into question, well, if there are N plus one of these, blockchain networks and, ultimately they're all going to kind of further sacrifice on the decentralization component, which no one really cares about in these systems. And if it's not like they coming out and saying, well, we're not competing with Bitcoin, we're not, decentralized digital cash, immutable, blah, 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 blah. We're a smart contract platform. Well, it's, maybe not trivial, but there's always a way to sacrifice more on the decentralization component and hyper optimize it. And I think that's what you're seeing with ETH is it was a smart contract gas, right? And then, in an effort to compete with Bitcoin, it said, well, no, we're ultrasound money. We're also this thing as well. And now you have a ton of competitors saying, well, we're going to optimize for this and we're going to optimize for that. And so Ethereum's in an interesting spot, right? It's now having to scale on, the scaling is coming from all of these second and third layers, of which the value accrual path isn't all that clear, in the sense that, you have something like Base offered by Coinbase, which does use an EVM. It ultimately does benefit from the moat or the network effect that ETH has built with its smart contract language and protocol standard, but only this may be a bit outdated, but like 5, 10, maybe conservatively 20% of those fees, I think it's closer to 5% of those base network fees go to the Ethereum protocol. The rest are siphoned to actually Coinbase, the centralized entity itself. So I think there's a world where, you can see Ethereum layers scale and do real well, and the actual value accrual doesn't, as originally thought, accrual to the ETH token. So that's a bit in the weeds here, but I think there's a lot of people are starting to ask some important questions in that world.
Yeah, I feel like you made a really good point there. It's like, even in the best case scenario where ETH is actually super useful and people are using second layer solutions for ETH, it still doesn't necessarily mean that ETH is going to be super valuable, even if it is actually getting used, which there's a lot of question marks of, is the use very sustainable in the long term anyways? I do want to ask you a lot about Metaplanet and what you're doing with like convertible notes and basically like capitalizing on Bitcoin's volatility. But first, I kind of want to ask you a little bit about what's going on macro-wise. I know a few weeks ago, we had like a crazy spike in the VIX. I think it was like Sunday night and Monday morning, Bitcoin sold off pretty aggressively down to 49K or something like that. What do you think about that? Like, I saw on the VIX, it briefly hit like 50 or 60, which was a level not seen since like March 2020. And then before that, like October 2008. Do you think that was like a coincidence of just like crazy volatility all happening at once? Do you think that's a sign that like risk assets bottomed right there? How are you thinking about that?
Yeah, well, certainly, the yen carry trade, that narrative has been around, or that reality has been around for a while. And, it looked like the kind of some of the, not the doomsday macro bears, but the people that have been talking about this for a while, kind of were claiming victory, and the subsequent vol crush following that, and the kind of the bounce in financial assets globally was shocking, and just going from like, I think it was usually when the VIX had the move that it had. And it never had happened that fast. I think it was the largest intraday gain ever. But going back, going from like that multi-year high back down to below 20, in the past it happened in like 90 days or 30 days, and it happened in like 7. And so there was just a crazy vol crush. I think, the Bank of Japan basically soft capitulated, where they said, look, we're not going to raise rates with any sort of global instability. which is sort of a soft central bank putt in the form of rhetoric, right? It does say something very substantial about the state of things when the entire global, not the entire global economy, but indirectly the entire global economy is kind of hinged to, one island country's central bank governor raising rates to 50 basis points. That's very telling of where we are.
No Bitcoin holder likes paying taxes, and Bitcoin savers could be leaving a lot of money on the table if they don't have a sound financial plan and tax strategy. Sound Advisory is a leading financial advisory firm with over $150 million of assets under advisement. They'll work with you to optimize and file your taxes with Bitcoin-friendly CPAs while also developing personalized financial strategies that align with your specific goals. Check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. And now back to the show.
Interesting with Japan is that, or just the macro situation in general is, sovereign debt as an asset class is, in an interesting way, is not fungible in the sense of Bitcoin's fungibility. One unit is always equal to another unit, but is fungible in a sort of like a pseudo quasi sort of, in the sense that basically there are pretty substantial derivative markets, swap markets for currencies. And so all sovereign debt in this kind of sort of weird esoteric way is fungible with one another. You can basically treasuries, and, like the Bank of Japan, the Japanese government is not going to explicitly default on its debt. The US government's not going to explicitly default on its debt. The Eurozone's a bit more complicated, but essentially none of them are as well. Right. So the credit risk is null, and it's more just a debasement risk component. And so for all these currencies that trade against each other, there's swap markets, right? There's interest rate swap markets. And so basically on a theoretical level, this sovereign debt is all fungible, right? And so Japan has had this, 0% negative interest rate policy for the longest time that they've just normalized to zero, quote unquote normalized. And now they say, hey, well, maybe we raise to 50 basis points. And the yen, which has been, the yen depreciating, which has been this gravy train where, all these foreign investors, domestic investors in Japan are borrowing yen, selling yen for dollars, and then buying dollar denominated assets or any assets out there. It was this gravy train where you're borrowing for nothing. The yen is depreciating. So what you pay back is less, and the assets you are long are mooning. And just a brief inflection in that trend and reversal, started what looked like to be, of the mother of all cascades. And so, look, there's many estimates out there in what the size of this sort of carry trade is. The dirty little secret is the entire world is a massive carry trade, and none of it can be functionally unwound, right? It's this thing that's forever growing larger and is subsequently backstop anytime it tries to naturally unwind. In a world where there was no lender of last resort, in a world where, say, I know it's technically not how this could ever work, but if there was fiat sound money, right, and there was a hard capped protocol at starting today for these currencies, you would expect the mother of all crashes, given the size of the debt burdens and where we are. But the reality is, and every market participant knows it, which is why markets moon on just the soft hint of capitulation by the BOJ, that any sort of unwind will be met with a backstop. And that's could be in Japan, the backstop could be in the US, the backstop could be in the EU and China, wherever, because all of these global currencies and asset markets are intertwined. So, I don't have a really strong view on the next couple of months. The elections are coming. Certainly it's interesting. Jerome Powell just said, it's time for policy to change. Looks like, the cuts are on the horizon. How many we get is a bit uncertain, but it's certainly an interesting time. And I think Bitcoin is pretty cheap here at 60,000.
Yeah, it makes a lot of sense. I guess it's basically like the whole world is massively over leveraged. Who's to know like which other credit contraction part of the market will start to occur. But obviously, whenever it does occur, at a certain point, the central banks are going to capitulate and send assets higher to just keep the game going as long as possible. and Bitcoin's the fastest horse.
Yeah, I mean that's that's essentially the thesis. I mean, I think there's certainly, and this has been talked about ad nauseum, but I think it's to see Bitcoin, these ETFs be as successful and sustained as the inflows have been as sustained as they've been throughout the year, and a lot of days, even on the worst days or mediocre days or up days, the inflow count is set at zero. Like it's not like the days where there's a big weekend move and Monday opens and it's a plus day, or even if it's just zero, the days where zero is very telling. A flat zero means that you have someone that's calling up the desk of the market maker that's creating and redeeming these units and saying whatever the delta is between inflows and outflows, if there's any outflows, I'll just take the balance. Like someone's saying that, whether explicitly or implicitly, to have a zero, like if you look at BlackRock or IBIT in particular, the amount of zero days they've had, right? It's zero is coincidental. It's not coincidental, right? They had someone that was shedding a big position, especially on the down days, or trading speculation, futures wipeout. There's some redemptions, and you have someone on the other side saying, well, instead of redemption, we'll just we'll take it, right? And it's just a testament to the strength of these new allocators, like people like Jim Bianco, who I don't mean to pick on, but he's saying like, these are speculative money. These aren't hodlers. These are degen speculators, and they're going to capitulate. And Bitcoin went to 49K briefly in this yen implosion, and like what was the outflows from the ETFs, right? Like all of these flows were underwater, or like most of the flows. The VWAP was deeply underwater. And where was the capitulation? I didn't see it. And so like I think this is just we're kind of in a phase transition. Obviously, we're not in the midst of a parabolic bull market right now, and a lot of supply is being absorbed. But this is kind of this state of every bull market, right, where incumbent hodlers take a bit off. We get some change of supply, and once at a certain point, like just with the way that we know where everything's going, with whether Trump gets in or not, right? Both parties are going to debase, and so it's just a matter of time before we kind of hit that threshold where things start to get a bit crazy.
Yeah, I tend to agree. All right, I kind of do want to dive into the MicroStrategy and Metaplanet convertible note strategy. Maybe like first, can you just kind of like briefly explain like what you're trying to do when you issue convertible notes and buy Bitcoin?
Yeah, so Metaplanet doesn't have any convertible notes issued. We haven't announced anything, but preliminarily, I guess rewind a bit before Metaplanet. MicroStrategy as a case study has been very fascinating. Not only just buying Bitcoin with excess cash that they've accumulated over the course of almost a decade in 2020 as a cash reserve, but then selling equity into the market, issuing these convertible notes in the market, especially after the volatility on their balance, the volatility of their common stock was cranked up a notch from their Bitcoin exposure, and borrowing at zero, right? The zero coupon convertible notes in the worst bond bear market we have ever seen. Zero, like when interest rates for U.S. debt went from 1% to 5%, zero coupon MicroStrategy converts were up 300% from par in 4 years, right? While the rest of the bond market was down 50%. Right, because essentially a convertible note is a debt instrument combined with a call option, and so Saylor really pioneered this kind of flip of the corporate playbook with dilution previously being a scary term, something that you avoided at all costs, but you have this concept of accretive dilution, where in Bitcoin terms and Bitcoin per share terms, it can actually be accretive. And so this is a really novel concept. It's not widely understood by almost anybody outside of our niche Bitcoin world, and maybe is radical or seemingly irresponsible for outside observers. But I think to people that have a strong conviction on where the world is going, this is exactly what corporate governance should look like. And so, I think Saylor, they've tapped the convertible note market 3 or 4 times, maybe 5 times since 2021, and have borrowed out, from 2029 to 2032. At like basically that, maybe I think the highest interest rate was 2%, right? So that's a really crazy sort of model to buy what we think is going to be the best performing asset over that time frame, and is deeply accretive for shareholders. So I guess fast forward a bit, I was, this model was a case study for me for a while, was something that I, analyzed and was familiar with deeply, and, an investor in myself personally, not with great size. I guess just kind of began to look and scope out the landscape for potential, copycat models. And long story short, details, aren't really all that important. Details aside, had this opportunity in the Japanese market to join Metaplanet, which isn't the size of MicroStrategy's business when it started. Far from it. Like 2 order of magnitude difference. But I think importantly, it was the stars kind of aligned where Tokyo is a large market. There's monetary policy weakness in Japan, currency weakness in Japan, and there's zero Bitcoin proxies in the market, in the equity market. So we saw an opportunity to do something really novel. And it started off, we've done a few things I think that are interesting. The first was a transfer of warrants and an exercise of warrants outstanding that were in the money to stack some Bitcoin. We followed that up with an issuance of debt against the hotel. We then, that put us at about 200 Bitcoin. We then announced I think this is probably the most interesting part of our story so far. Amidst this all, actually, the stock really crazy. Obviously, I can't comment on like the specifics of the direction or whatnot, but this is just objective fact, and kind of all the stuff we're talking about is publicly disclosed or just transparently available. The stock valuation got super hot. It was the best performing stock, the second best performing stock on the planet at one point temporarily, out of 48,000 public companies before crashing, before falling like 70 or 80%. But at the day of this yen-plosion, the VIX to 66, the timing was very coincidental. We had been working on this behind the scenes for about a month. We announced gratis allotment of stock acquisition rights. So gratis allotment essentially is free. Gratis means free. A free allotment of stock acquisition rights to all shareholders, with the exclusion of U.S. shareholders, unfortunately, because of SEC rules. So what does this mean? It means that we announced it at, I think the stock was 620 yen, and the strike price for this was 555 yen. So we essentially airdropped a free in the money call option to every shareholder for no cost at 555 yen. And so I think this is really interesting because directly the day after, directly following that, we announced another a 6-month loan for 10 basis points for another billion yen to buy more Bitcoin, primarily with the idea of cranking the volatility even further for our balance sheet. But essentially, you'd think about this as basically a 2.5 month. The stock options, the X rights date is September 3rd, and it goes through October 15th. So when this was announced in the beginning of August, this is essentially, a 2.5 month in the money call option on the most volatile stock in Japan. The realized volatility of Metaplanet shares since inception is like 250%. And so, as you value this and as you think of this, there's a really interesting sort of phenomenon that could have potentially happened and has been happening, that has unfolded so far. We'll see how it plays out, where the market responded to that initial announcement with 2 days of limit up. The stock didn't trade for the next 2 days. It was limit up pre-market for the entire first day and second day, and then the third day was up 20% again. And since we announced it, it was at 600. It's now trading at 1,700. So the value of the rights, the more the stock goes up, the more valuable the embedded warrant becomes. And so there's basically a feedback loop happening, where if you're thinking about how an X rights stock should trade, and so that again, that's all publicly disclosed, but it's been very interesting to see, and that would raise us 10 billion yen. We expect to exercise. We expect 10 billion yen to come through the door, of which around 7 billion of that is going to go to Bitcoin, and so. That would put us at, that would basically, despite in the case where all of the shares, all of these acquisition rights are exercised, our shares outstanding would double. But our Bitcoin per share would basically increase by some odd 50, 60%. And so this is, a very unconventional. When Simon and I, the CEO, were thinking about the best ways to kind of approach this in terms of the idea of kind of like monetizing the volatility of the common stock. We basically got together and evaluated every option. To convert is obviously something to explore, but I think equity capital, we want to increase that substantially before thinking about something like that. Obviously, there's warrants or sort of like private placement deals that are possible. Outright debt is possible, but this rights issue, which is very unconventional, you don't see it often, and usually it's a very defensive move, right? It's a corporate restructuring. It's a kind of cleaning up the balance sheet and paying off some outstanding debt. Usually these rights are given to shareholders, and it's a huge steep discount, which incentivizes everybody to exercise. And so for us, the idea was we're going to put this out and basically say, like, give every shareholder the free option and say we're going to, use the proceeds transparently to become basically the de facto Bitcoin holding company in Japan.
In this frontier moment, Dylan is talking about Metaplanet issuing warrants to buy more Bitcoin. As he mentions, warrants are usually used as a defensive strategy. Here's another example to help you understand how warrants work. During the 2008 to 2009 financial crisis, GM issued warrants as part of its government-led restructuring. Warrants allowed key stakeholders like the US government and bondholders to buy GM stock at a fixed price, offering them the potential for future gains without immediately diluting existing shareholders. For instance, if the warrants exercise price was $10 and GM stock rose to $100 after the recovery, the warrant would be worth $90 at expiration, as you could buy the stock for $10 and sell it for $100. This strategy gave stakeholders a chance to benefit from stock gains while preserving value for current shareholders. And now back to Dylan.
And so far, that X rights date's, coming in about a week or two. But I think the idea is, we want to leverage the volatility of not only Bitcoin itself, but also, our public treasury.
How did you guys originally come up with this idea? What would you say, if a traditional Wall Street analyst that's analyzing normal blue chip U.S. public equities, and if they heard what you just said, what would they think about what you just said? I'm curious. What do you know?
Well, yeah, it's Metaplanet is not at the current point the most robust conglomerate business from a cash flow perspective. It is part of it is that, and we say this in the filing, with this the SRS, the Securities Registration Statement that we published on the TSC in Japanese and English, is 30 pages long. And in it, basically, we answered every single question possible about the business, the plans for the business, what we're going to do with the funds. The Tokyo Stock Exchange came up, and they basically were like, okay, how does doing this offering to acquire more Bitcoin improve the prospects of the business? And so we had to go back to them and explain, okay, well, there's a few things you can do for Bitcoin. One of the things that primarily we plan on is having Bitcoin as a store of value. We can also use Bitcoin as collateral for financing. We can also use Bitcoin as a medium of exchange for trade if we need to. And we can also use Bitcoin as a financial asset in the sense of the derivatives market. So if there's a large futures premium, and there's let's say a 10, 15, 20, 30% annualized discrepancy between futures price and the spot market, we can use our Bitcoin to capture that. Similarly, thinking about volatility, Bitcoin has a nascent but very much growing options market. I think one of the things to watch out for on the horizon is the spot ETF having an options market. So we basically, and this is all in the disclosure, we basically went back and forth with the TSE for a month through the month of July, which is, it's funny. We put this out on August 6th, when I believe August 6th or August 9th, when everything was blowing up, and our own shares were down 70% from the highs. And it seemed like, the timing, like we just, pulled it out of nowhere and posted it. But it was actually like a month in the making. The timing was coincidental. But we basically had to go back and explain all of this to the TSC. Okay, well, why would you raise money to buy Bitcoin? And so for us, we explained, well, Metaplanet in particular has 10.6 billion yen of tax losses from the previous legacy business. So there's about 70 million USD of tax loss carried forwards, meaning that, if you earn any sort of income, in, the first 10.6 billion yen isn't taxed, or, we can use those realized losses. And so when we're thinking about our strategy, obviously the HODL strategy is the core tenet of what we're doing. But if we could do something like raise capital and then look at some of the stuff in the Bitcoin options market where, you can sell the right tail upside, or you can sell cash secured the left tail downside, right? With puts and calls, there's like a pretty solid premium out there for what you. And so in the essence of like monetizing volatility, Simon is basically started his career as he was a Goldman Sachs derivatives trader, right, in equity markets. And I'm also a bit familiar with some of this myself. So I think, there's level one is just taking some cash and buying Bitcoin. Level two is looking at all of the things you have available to you as a public treasurer and saying, well, okay, the idea is Bitcoin per share. Let me do anything I can to get more Bitcoin. And then I think for someone like us, where, the Bitcoin pivot is like the business strategy at this point, and like that's everything we're thinking about. What else can we do? And so there's a whole lot of stuff to think about. And I think, we have some really cool ideas ahead of time. But the interesting thing was, in talks with the TSC and in the last, few months of talks with both Bitcoin funds and TradFi funds, or not funds, but allocators, people in all sorts of business, explaining this very story, right? Just having intro calls and saying, hey, this is what we're doing. I've said this many times before. I think I may have said it on Peter McCormick's show. But there's like two buckets, right? There's two circles of understanding. There's like the Wall Street people that get corporate finance and governance, and maybe even like they understand how to value derivatives and options and Black-Scholes stuff. And then there's like the Bitcoin people in the other sphere. And the overlap of people that kind of can understand both worlds, that like middle of the Venn diagram, is super small. And so, I think obviously what we're doing is very, very different. I'm aware of that for sure. And then we started at a very small base. So it's still, it's not like all that impressive to throw a micro cap. But I think what we want to do is set a standard in Japan and globally for like what can be done, in the same way that, some of the pioneers like MicroStrategy have now, you now have companies like Semler Scientific saying, okay, we'll also do an ATM and acquire more Bitcoin. Like the precedent's there. And in our filing, actually, when they came back to us and said, well, I don't know about this, we said, well, look, there's clear precedent for Bitcoin accumulation as a treasury asset. There's MicroStrategy, a software business, Semler Scientific, a medical manufacturing business, Tesla, an electric vehicle business. So like there's clear US global corporate precedent for this. Nothing we're doing is radical. And they came back to us and we're like, okay, understood, no problem. So I think it's just about kind of normalizing it and shifting the Overton window.
Yeah, I mean, I love it. I'm obviously a huge fan of what you guys are doing. I've seen like Saylor, I think it was in his last earnings call, like add slides, and they framed it as Bitcoin yield. It was in the context of like increasing their Bitcoin per share, but I think in the slide it was referenced as Bitcoin yield. How do you like to think about it? Is it like, should companies focus on increasing their Bitcoin per share? Should that be like referred to as like a Bitcoin yield, or what are your thoughts there?
Yeah, I think, the Bitcoin community, look, I think the framing is very unique. The Bitcoin development company framing, I think, was particularly creative and ingenious in the sense that, every baby boomer on the planet in the investment world understands what a real estate development company is. You're taking an asset, you want to acquire more of the asset, you want to short the currency and use financing to acquire more and more and more of the asset. And you can even use the asset for cash flows. I bring up the BlackRock ETF and the all these, the applications for options against them, because within a year you're going to see, you've already seen it with with MSTY. MSTY is a structured product ETF with MicroStrategy that has MicroStrategy stock and sells covered calls against MicroStrategy stock. So if MicroStrategy stock, goes up 20%, you might miss some of that upside. But if the stock is consolidating or flat, or it's down, or it's only up a little bit, these calls, you're selling these out of the money calls and they're expiring worthless, and you're getting dividends. And the dividends are like massive because MicroStrategy is so volatile. It's like, you can't technically annualize dividends for an option because it's not yield in a traditional sense. It's, you're just basically selling a right tail. But nevertheless, the at a certain point, the dividend yield was like 100% annualized. That's how big the dividend payments are. So all this to say that I think in the next year, if we circle back in August 2025, I think there's some pretty large structured products on, say, IBIT or the Bitcoin ETFs where, they're utilizing these very deep liquid options, and you have cash flow generating Bitcoin proxies or products, right? Where does it capture all of the upside when Bitcoin has a parabolic run? No, it doesn't. And you leave actually some of that upside off the table. But now Bitcoin turns into not just, it's not just a store of value reserve asset to hodl, but it's something that the legacy world is familiar with, right? It's a cash flowing asset. It's a collateral asset. You can do all these different things with it. And so when you think of Sailor, like the Bitcoin yield from MicroStrategy, I think, again, yield is like, there's so much PTSD in the Bitcoin community from the yield term. But I think it's, yield is essentially, how you or I would have said, like accretive dilution, right? And, they are the pioneers of the accretive dilution. So if they want to call it Bitcoin yield, then I think they have every right to do so.
Yeah, no, that's fair. It's definitely a not a great word or phrase to say. But yeah, kind of on this topic, it's like, how do you compare something like Metaplanet or MicroStrategy with just cold storage Bitcoin? Is there room for both in a typical portfolio, or it's like, how do you think about, comparing the two, and like, what should the allocations be?
Yeah, I mean, I'm not going to give investment advice to anybody. The best part about Bitcoin being this kind of monetary commodity is we can say anything we want about it for the most part. You can say anything you want about oil or gold. And so with Bitcoin, it's like, yeah, like I think it's going to go to here. And I think, I want to buy Bitcoin every day, and I'm not selling my Bitcoin. And there's a radical sovereignty to cold storage Bitcoin. And he has these monetary properties that nothing else has. We both know that story very, very intimately. For the Bitcoin proxies, or like, the novel concept of a Bitcoin development company, I think, one, it has to be an internal calculation of like what you think the fair value is, and, what's the premium to this, and is it sustainable, and, all the unique sort of, like, never mind these two examples, like it's the third or the fifth or the 10th company, like where can this realistically go? Is there a path to increasing Bitcoin per share? Is there a path to this, in MicroStrategy's phrase, Bitcoin yield? Right. And I think, there's going to be plenty of companies that have very much a definitive, tangible path for that. Right. But there's going to be others that don't. And so I think there's room for it. Right. I mean, for instance, in Japan, right, there's one of the things that, was a deciding factor for myself to pull the trigger from a career sense on this was, in Japan, the tax rate for Bitcoin is up to 55%. It's miscellaneous income currently under the current tax law domestically in Japan. So it's the miscellaneous tax rate. It's basically what bracket you're in. It's up to 55%. So if you sell Bitcoin, you're on the hook for a huge, huge tax burden. But listed securities in Japan are 20% flat tax. So, there's also basically every person in Japan, not every person, but most everyone in Japan has a brokerage account or two or three. And most everybody has a tax advantage account as well, called a NISA. So if there's a tax advantage to it, if there's, maybe you have some sort of walled garden, thing through your employment or whatever it looks like, where like there is no ETF in Japan, there is no proxies at all in the Tokyo stock market. So for us, it was like, well, we're filling a demand. We're absolutely filling a demand. And two, as an operating company, you can do many things that an ETF couldn't, or cold storage Bitcoin couldn't. People have asked me, well, I'm thinking of doing this for my personal business, what you guys have done. And I'd say, well, absolutely you should. But one of the components that makes the public markets opportunity so lucrative is the ability to issue stock, right? Is like, you have the ability to like fractionalize yourself, fractionalize your operating company and issue it, and it's liquid and it's trading actively. And that doesn't exist for Joe Burnett or Dylan LeClair, right? And if it did, then, we would take advantage of it. But that's the domain that comes with being a listed company. So I think, there's absolutely going to be, I guess, more of these, if you will. I think it becomes more conventional and mainstream as time goes on and less radical. And I think, as the beautiful thing about this is that, and MicroStrategy has shown, that they're very diligent about this, is, as the volatility profile of Bitcoin decreases, you can continue to strategically put on smart, thoughtful leverage against it to keep that volatility high, because the volatility in your common stock unlocks all of this other stuff for you as a corporate treasurer, particularly convertible notes at extremely low interest rates or near zero, as well as if you're thinking about, how like a typical PIPE transaction would work. PIPE transaction meaning a private placement deal, right? So you're a fund or you're an activist investor and you go to a company and say, I don't want to buy shares on the market. I could, but I want to get new shares from you, and you can get the cash that I invest on your balance sheet. And it's something like that. A typical structure is, okay, I'm going to get X amount of shares of stock, but I also want warrants. The stock's $1 right now. For 5 years, I want a $1.50 call option as well, right? So I want the right to invest in your stock at $1.52. That's 50% premium to where it's currently trading. And you could sell that to me, right? And so with something like that, volatility, if you're just thinking about like an options model, the more volatile it is, the more uncertain it is, the more valuable that option becomes. And so as a corporate treasurer, if you're comfortable about where this is going, you have the ability to weather the storm on the downside. Volatility is absolutely your friend. It's not something to avoid. And that's something that we're very diligent about Metaplanet. That's, why we've taken out some of the loans at the times we've have is it's not just stacking Bitcoin now. It's also how we're thinking about, we're actively trying to increase vol. We want to be the most volatile stock in Japan. And so, these are some things that we know are very different and very radical, but, I think this is kind of the meta or one of the metas of the cycle, no pun intended.
Yeah, it's definitely very fascinating. So would you say like this volatility potentially creates like a positive feedback loop, whether it's with convertible notes or like pipes? It's like if your stock is extremely volatile, it effectively enables you to acquire more Bitcoin at a faster and faster rate and do this accretive dilution that you're talking about where your Bitcoin per share increases over time. Is there like any sort of positive feedback loop here?
Yeah, I mean, absolutely. So, if you're borrowing capital, if your stock is volatile and you have the ability to say like issue a convertible note, and the convert is 40% out of the money, then, you buy Bitcoin now, the convert is turned out 5, 6, 7 years. Bitcoin has to compound at, whatever it is, and not even all that much to, 40% over 4 years or 5, 6, 7 years. Like it sounds like a lot, but that's not all that much. Bitcoin sometimes has done that in a month, never mind a month, a couple of weeks. And so, on a Bitcoin per share basis, when you're thinking about this, Bitcoin per share immediately goes up. You have the debt plus the Bitcoin, your volatility increases, right? And then if the stock at all increases, right, once you're at 40% of the money, you're not going to pay that back in debt. You're just going to issue new shares, right? So you basically like kind of pulled forward some of those shares and you sold them at a premium to the, your current market value when you issued the note. Your Bitcoin per share, even when the shares convert, even if the shares convert deep in the money, right? I think that they extinguished a convertible note early a few months back, MicroStrategy did. And the stock, it was so deep in the money that they just, basically the bondholders tapped them on the shoulder and said, all right, it's time to just do this early. And so, there was a temporary 6-7% down day because they issued, I think 6, 7, 8, 10% of the shares from that 2021 convert, right? But if you looked at the time versus their Bitcoin per share then versus now, they basically pulled forward that to accrete Bitcoin. And so I think, there's the positive feedback loops are very, very strong here. The debt gets more Bitcoin. It's levered Bitcoin on the balance sheet. You're cranking the vol. It makes, any further, sort of warrants or the convert itself more valuable because of the volatility, right? So this is why for us, we haven't done a convert. But, we announced the rights issue, and the day after we announced it was a short-term loan, but with the confidence that we have this 10.08 billion yen round that we expect to be fully exercised.
In this frontier moment, Dylan is talking about warrants and also convertible notes, but it's a difference. Imagine you have a lemonade stand and you need some money to make it bigger. A convertible note is like when a friend gives you some money now and says, instead of paying me back with more money later, you can give me a little piece of your lemonade stand when it's worth more. It's a loan or debt at first, but it has the option to convert into ownership of your stand down the line. A warrant, on the other hand, is like giving your friend a special ticket that says, if you want, you can buy a piece of my lemonade stand in the future at a price we agree on today. They can decide later if they want to use the ticket or not, so the convertible note starts out as debt and can turn into ownership, while the warrant is simply a choice to buy ownership later. And now back to Dylan.
In the sense that we want to just crank the ball, right? Because theoretically, and I understand that theory and reality don't always match, but theoretically, if all else is equal and the balance sheet vol or the common stock vol is cranked up, the value of the rights increases, which if everybody's getting a right for free and the rights value increases, then what should you do as a rational investor, right? So there's all sorts of feedback loops there. And so obviously some of the stuff can work in the other way, right? We saw in 2022, MicroStrategy stock was almost round trip to where it started in 2020, right? When Bitcoin was 15,000 and their average purchase price was 30,000. And, some of these converts were very much busted in the sense they were, had a big drawdown and there was, a lot of short sellers piling on. This could absolutely work both ways, right? But I think, what Saylor showed is, as long as you kind of term this out and are very diligent about the strategy on a long-term time frame, that volatility is the price you pay for returns. And MicroStrategy, if it was in the S&P 500, from the time it started, this would be the best performing stock in the S&P. So it's certainly a testament to it. And it's been a crazy story, and I think it's honestly, just the first few innings.
Yeah, so it seems like these potential positive feedback loops could last as long as Bitcoin is more volatile than a lot of other assets. When do you think Bitcoin's volatility will end, or will it ever really go away?
Well, that's the thing, is that I think it, even in a world where, this is the crazy thing, the reality is it trades 24/7, 365. Even in a world where the 120 vol goes to, it's not 120 anymore, but 120 vol went to 100, went to 80, went to 60, where it's been trading the last few months. Say it goes to 40 to 30 to 20. Well, if it's trading for 20% annualized vol for a year and, the days of 10% up or down are gone and it's now 3 to 4 or whatever, then you can just, think about the leverage, the mark-to-market leverage and the balance sheet leverage that real estate investors have, right? And there is no mark-to-market pricing on real estate. They're 5 to 1, they put 20% down, right? So in a world where Bitcoin doesn't draw down 80% anymore and it draws down 30 or 40%, then all of a sudden your leverage profile can look a lot different. And you can still achieve the synthetic 100% volatility. MicroStrategy can still be 100% vol with Bitcoin at 20% vol if they just crank the leverage. And so in a theoretical world where Bitcoin is this thing that trades 24/7, 365, that's not theoretical, that is reality. But even in a world where vol gets cut in half or goes down 70, 50, 75% from this point, corporations that are diligent about this and understand that, as Saylor says, volatility is vitality, can say, okay, well, we're just gonna issue another convert, or we're just gonna, issue some secured debt, or we're gonna, Bitcoin collateralized loan, to, crank that a bit more. and unlock some of this stuff. And so I think it's really interesting because like both converts, these like warrant deals, warrants are another thing that like, are traditionally it's like, oh, a company is emerging from bankruptcy, or a company is, in a kind of a desperate round, or is backed into a corner. Okay, here's a warrants deal, to some vultures that are gonna loot the cap table, right? Because they have no other option. Or a rights issue traditionally is the same sort of thing, right? It's like you're backed into a corner, you have no other. It's a defensive sort of move. But for this Bitcoin strategy, the dilution being on the offensive is like super interesting, and I think that's just like a flip that basically our little niche community understands, or some people in the community understand. Broadly in the TradFi world, it's still like such a different oddball concept that it seems like it's irresponsible in a way.
Yeah, it's wild to think about, I guess. And I also like on the topic of Bitcoin's volatility, like enabling you and MicroStrategy to do these types of things. I feel like it's interesting because the world most of the world has no idea how to price Bitcoin, right? Like Saylor was just on stage saying his base case for like 2045 is like $14 million per Bitcoin. And then like a typical person would be like, Bitcoin's either worth zero, most people would probably just say that, or it's worth $14 million. So like to me, the volatility, and right now we're at, $60,000, whatever it is. That's there's a big range of what it could be. And it seems like no one really knows where it should be. So maybe the volatility is going to be here for a very long time, or until we get to like $10 million per coin or something like that. I don't know. What do you think?
Yeah, I mean, I think that, this is exactly what it would look like if something was monetizing from 0 to a trillion to 10 trillion. Price targets, I think are a bit futile. I think, for a $14 million per coin, I think a lot of, I think the average home costs $1 million, or, something like we're in a world where fiat, the dollar and these things as we know them today are a bit different. And I think with, these legacy currency systems, everybody that's tracking this or has a mental model that's implicitly or default in linear terms is, has the potential to get burned, because when these things kind of reach some form of exit or escape velocity, like it's not linear, it's exponential. And maybe we're already in that, the S curve or the base of the parabola, in the, never mind just Bitcoin, but like the actual, if you're just looking at like, say, like the debt chart, right? It's honestly a bit like unfair to just look at, linear chart of US debt or M2 and say, oh, well, look, because that is compounding year after year after year. But the actual rate of change itself, I think we're at a point now where like expecting to go back to this 2% a year sort of disinflationary world is like, we're past that, right? So what does this future look like? What does the future look like where they're cutting, despite being at 3%, or, where both political parties are on the same page about basically wartime deficits and peacetime. These sort of things are a different world. And so, how does Bitcoin trade amidst all of this? Well, there's obviously a big information gap. I think that will continue. Obviously, more and more people are coming to understand it. But, if the total addressable market for this thing is 100 trillion plus, then like we have a whole lot of price discovery to go through this. So I think, the next time our echo chamber and people are starting to say this time is different, this time is hyper Bitcoinization, I think we probably draw down like 60% from that point. But I don't really know. I don't have a strong view either way. I do think though, over time, you will see that, 1 year, 2 year, 4 year realized vol kind of continue to level out closer to like, the NASDAQ, I would say, or something along those lines.
Very interesting. Well, a few more questions and we can go ahead and wrap it up. What do you think about the models? Like Carlyle model is like the newest, it's been around for a while, but now people are talking about it a lot more. We've had the stock to flow model. Like, what do you think about the models? Are they useful? Are they useless? Is it going to help at the top of this cycle? What do you think?
Look, like I say this as someone that, I remember pretty distinctly I was in high school and I saw the stock to flow model and I was, some guy that liked math and stats. And, I saw this, on log scale and was like this step function. It was like, wow, what is this? And, started to read, I read that paper, and then in the citations, it was the Bitcoin standard and all this other stuff. And I went down this rabbit hole of trying to figure out what the difficulty adjustment and the halving and everything else were. And it was like big for me, but, it was never like this. I never treated it as like, gospel per se. The power law is interesting. I like log, on the XY axis is pretty damn cool. But again, like you're trying to just saying that this is the law of the land, and this is exactly where Bitcoin's going to trade in this range. It's not, you can't account for like the exogenous variable of the dollar. What if there is a dollar? What if there's a deflationary shock? What if there's a right tail inflationary crack up boom? And, what if the S&P 500 is doubled in 4 years? Whereas Bitcoin, like the power law says nothing about any of that. And simply saying that this is reality. Like, I'm a math guy. I love that sort of stuff. Like when I saw that, I went and tried to, build that in Python, so like, I like that sort of stuff. I think it's useful as like a mental framework, but anybody saying that this is the default and it must hold and everything else, like as someone that saw the 2020 stuff and was bought in, I was really a big fan, and I still am, of like just, rough models. All models are wrong, but some are useful. I think these are two kind of just like useful things that will work until they don't. And they won't work forever, but it's, debate and people crunching numbers and valuation frameworks for Bitcoin. I don't think it's a bad thing. I think it's all in good faith.
Yeah, I pretty much completely agree. When it comes to, I guess, price prediction, there's no such thing as a true law. Like it's not guaranteed to happen whatsoever or anything. This is a question actually from Twitter, a guy named Bitcoin Ollie. He asked about like you when you were in high school, like if any teachers as of now today congratulated you or like reached out to you like on your success. I know like I think you started college, then may have dropped out of college. Now you're, working at Bitcoin Magazine, working at Metaplanet. You're leading the Bitcoin world to some extent, which is kind of cool. Like, have people reached out to you?
Yeah, for sure. Funny enough, my econ teacher in high school that sent me down originally like a value investing rabbit hole and kind of gave me like the first sort of nudge in that direction. He's speculative attacked the dollar with good size in 2021, and we still text on an ongoing basis. And so, with a pretty substantial amount. And so, I had a little presentation like 2 years back for some high schoolers that I probably were yawning and not paying attention the entire time. But for sure, I've kept in contact with some of the people at college and high school and whatnot. And I would like willing to help out in any such way. I think it's been kind of a perfect storm, like career wise. I won't say that I like mastermind planned any of this because I didn't. It was just kind of stumbling forward and into the right opportunities. But I think it's sort of just a testament, not just to Bitcoin, or not even to Bitcoin, just like the internet age, right? If you have an understanding of something and can learn something in the public domain, then you can provide, and whether it's a skill or some framework or knowledge. And so, that's kind of, I've said this before, but I think it was Jeff Booth's book that made me kind of like flip that sort of thinking, like, or flip that mindset of like, oh, it's all just information. The information is basically free at this point. You can kind of just do what you want if you have a good understanding of it. Obviously, there's roadblocks like in the credentialist system and that professional world. But the good news about the Bitcoin industry, if you will, is a lot of those credentials and whatnot not don't apply, but aren't as robust as they are maybe in the legacy TradFi world. So I think it's pretty cool, and I think for people like our age, college is obviously valuable. That legacy education is obviously valuable, but weighing that opportunity cost in Bitcoin terms, I think is something that would be wise, especially in the next 5-10 years.
Yeah, I completely agree. You definitely have an awesome story. 2 more questions, and then we can close it out. And these can be pretty fast answers if you want. What's something that you believe that most Bitcoiners would disagree with?
That's a good one. I used to believe, and I'm not even saying it's because the recent developments with the Trump campaign and whatnot, but I used to believe pretty deeply that like in 2020 on election night on November 6th, I wore a shirt and it was like Republic, it was conservative, progressive, libertarian, all crossed out, like Bitcoiner, and I used to believe that like the state as we know it would, kind of dissipate and, Bitcoin would be this forcing function for it to dissolve and we'd live in kind of this anarcho libertarian world. And now increasingly, as my understanding of like politics and, a monopoly on violence, if you will, has evolved and changed and grown, I would say that, like you may not be interested in politics, but politics is interested in you. A lot of people don't agree with the kind of the alignment with the Trump campaign from the Bitcoin perspective. Just for that angle of like, okay, we've been playing defensive for so long as an industry or, and we've been playing defensive, time to go on the offensive, but never mind just like the Bitcoin industry and Bitcoin interests. I think into just general politics, like if we are headed to a world of increasing collectivism and populism fueled by a growing wealth disparity because of the first, second, and third order effects of the fiat system, then it's a bit naive to say, well, just leave me alone, man. Like the libertarian sort of like thought. And I know I'm glossing over a lot of details, but I would say that, I tweeted something out like this a month ago, but, in the face of like Bolshevism, in the face of cultural Marxism, it's not an option to say, well, I'm actually a libertarian, or I'm actually an anarcho-capitalist, because that, in the face of a mob, that doesn't matter, right? So in that sense, when I say that, I mean that the naivete I had as an 18, 19-year-old, and I'm not pretending I know everything now. I don't, of course not. And I'm always willing and open to learn new things and new ideas and frameworks. But from a political standpoint, I now no longer believe, similarly with like seeing what has happened in El Salvador with Bukele, with what the mainstream, in the U.S. would consider to be radical right extremism or gasp fascism in El Salvador, becoming from like the highest crime rate in the world to the safest country in the Western Hemisphere in the span of 3 years. I would say that the state as we know it could be deeply, not constrained, but we can put a check on the state with Bitcoin and with the fiscal austerity that Bitcoin enforces. But it's naive to think that monopoly on violence will disappear and centralized power and authority will disappear. And I would say maybe we don't, want it to just disappear because that would lead to somewhat of a chaotic world. But what we do want is the ability to, more explicitly say no, or like vote with our wealth and vote with our own interests. And that vote, I think, doesn't come at the ballot box, but it comes by the ability to not be, implicitly stolen from with the debasement that comes from fiat. So I guess to long story short, answer your question is like, I no longer believe that the state collapses or dissolves as I thought, after reading a few Bitcoin books and, the big debt cycle framework that in 2020. But I do still believe deeply that, looking out 20 years, Bitcoin at $100 trillion valuation means that governments can't endlessly spend deficits on foreign wars and wasteful welfare programs and funding whatever they want without any sort of reaction function from the populace. I don't think that's possible.
Yeah, I kind of agree as well. I had this similar thought. I feel like Saylor's kind of helped with that transition. Like he made Bitcoin more institutionalized, kind of like more real. It's like, hey, like if this thing's going to be that big, like we got to play the game for a little bit, and then see where it goes from there.
Yep.
Last question, then we can close it out. What's the biggest risk to Bitcoin?
Yeah, I would say like resting on our laurels collectively, but part of me does think that we're kind of on this this, irreversible crash course. Like we've already hit in kind of the entropy of the universe, the entropy of the world. We've already kind of like a critical mass or a point of no return. And we're just probabilistically kind of going towards this ultimate outcome. So I don't think that there's one person or entity per se that is systemically important or too big to fail for Bitcoin. So with that said, I think that, the biggest risk, if we're thinking of like purely exchange rate, is, the completely improbable case of like fiscal austerity. Like, I don't see that at all happening. But, if, Donald Trump and Kamala Harris get together and say, hey, we're tightening the belt and we're cutting Social Security and we're cutting the military budget and we're paying off the debt, then I think all assets, Bitcoin included, take quite a hit. Do I think that's probable? I think that has basically a 0% chance. So, I basically, Joe, like I think you and I both, for the last 3 or 4 or 5 years have spent countless hours, hundreds of hours asking ourselves what would lead to an invalidated thesis. I think there's, edge case scenarios that of course have to be entertained, but are by the day increasingly unlikely, if not, almost improbable. So, I mean, we can obviously get into like, there's a whole other conversation about like, top-down capture and surveillance and whether Bitcoin is just another asset that's very valuable, like the NASDAQ index in aggregate, or if it's cypherpunk money. And I think that is yet to be seen, what's the ultimate vision and how much sovereignty, 20 years from now can be achieved, right? Whether that's, eCash, Lightning, the development of privacy tools, the kind of the fight with the state for anonymity, like we're seeing in Europe, right? Like basically a total crackdown of this stuff for the Telegram CEO. So that fight still is to come. But Bitcoin I think as an asset, just the value of it, the exchange rate value of it, I think we've, basically with the ETFs was like the stamp of approval of like, all right, like we've passed the event horizon. In hindsight, this will be the thing that was like, in hindsight, completely obvious. So I would say that's the risk, right? It's just like, the improbable scenario of fiscally sound government. But more so, like if we're thinking about the ultimate cypherpunk vision is, Bitcoin wins and it's extremely valuable, and everybody that holds it has, protected or appreciated the real value of their wealth. But it didn't ultimately achieve the kind of this like sovereign cypherpunk ideal that people originally thought. I would say I'm not confident in that scenario happening. I still think there's such an immense amount of talent and intellectual rigor building on this that we don't know what's going to come, and all of the systems and open source things that are going to be built on top of it. But I would say I guess if you want to think of it as risks, those are what I think about.
Yeah, I agree. That was well said. Well, Dylan, thanks so much for taking the time to do this. It's always great to chat with you. Any closing thoughts, like where people can find you or anything you want to talk about?
No, this is great, Joe. I appreciate it. It was good to chat and finally come on here. We were supposed to do it about a week back, but I messed up my calendar. So appreciate you being flexible. No, to find me, I guess just on X at Dylan LeClair _ Yeah, man, this has been great. I hope that we can find some time and do this again one day.
Yeah, absolutely. We definitely will. So Dylan, thanks again. This is great. Appreciate it.
Cheers.